Start in just a minute. Okay, perfect. So let's start there. Guys who are new here, you could share your trades in the off-topic chat. Take a screenshot, preferably 2 time frames at least, the 1 and the 5, or the time frames which you are using, and a few minutes before that, few minutes after that, so we can read it much better, and send it in the off-topic. If you guys have any questions, you could ask me along with me explaining stuff so that I could follow as well. Okay, and let's start. First trade here is for Daniel. Daniel traded CGC. Let me get this like this. No, it can get bigger actually. No problem. So Daniel traded CGC, and I see you took it to the short side. I assume a second leg down for a reverse ABCD pattern, right? So look at this, guys. CGC, first candle is red, first leg down, reverse ABCD pattern. This is a pullback 70%. This is the high, this is the low, and I like looking at this to the short side. When a stock is literally below all the moving averages, then I'm definitely taking it to the short side, not to the long side. Why is that? Because if I take it for a break of pre-market level right here to the long side, I'll have the next moving average and the daily level right on my way. If I take it to the long side before that or somewhere right here, I'll have view up and the 9 moving average on my way. So there is a lot of resistance on all the time frames, and because of that, I'll be only short buys on this thing unless I get a scalping setup to the long side. Now, CGC dropping down, reverse ABCD pattern, small selling pressure wicks right there, new 5-minute low. That was a good drop right there, good reverse ABCD pattern. After that, it's holding this level. So good, that's the level right there. Sort of doing some sort of a descending triangle, and you can see that, guys. Flat support right here, right? That's the 5-minute chart. You have a flat support right here, and you are having lower highs on the 5-minute chart. Lower, lower, and lower. So it's a descending triangle. However, this descending triangle, by this moment, it looked so weak for a descending triangle. It finally breaks down, but again, it's getting some buying pressure right here, breaking the descending triangle pattern right here, and this was decent entry to the long side, not for a reversal, but for a scalp or for playing a pullback. Starting to get buying pressure, new high, take it to the long side right there, and then just partial at the 50 moving average on the 1-minute chart for a quick scalp play or a quick reversal. Now, this was a parabolic pullback, right? It's going up, it's breaking the 9 moving average on the 5-minute chart, and then it's doing an M shape, which is good to see when you're taking a reverse ABCD pattern. And I will show you a trade I also took with this pattern, but unfortunately it failed. This trade you took right here, I see it eventually failed, and the trade I've taken for the same setup unfortunately failed, but it was a good setup. M shape right there, you could see it here, M shape right there, pulling back, you are taking it to the short side, having your stop loss at the wick, never getting you stopped out. This was your stop loss. You gave it so much room actually. Yeah, I wouldn't have given it this much room. I would have just tightened it a little bit here or at the wick right here. But I see you took your stop loss at the high of the M. It worked out partially, didn't hit your 2 to 1, and eventually you just exit at break even, which was a good exit. It did sort of a double bottom with the second bottom higher than the first one, and unfortunately the setup failed. So this was a really good setup right here, but unfortunately didn't work as planned. Good job, Daniel, managing this trade and exiting at a small loss instead of holding it to your maximum loss. Now, Twitter, same thing right there. Drop down, pull back, sort of a reverse ABCD pattern. You are taking it to the short side right there, and it got you stopped out. Like, this should never have got you stopped out, right? You put your stop loss right there above the consolidation area, and this thing never gets you stopped out. So basically, this wasn't a bad trade, this was a good trade. Same thing, below all the moving averages, dropping down, pulling back right here, breaking the high wave right here, but can't continue going higher, sort of fake view up breakdown, consolidating above view up for a few times, breaking down, you're taking it to the short side, put your stop loss above a new 1-minute high or at the high of the consolidation, and it should never actually get you stopped out. But it's fine. and that happens. So yeah, this wasn't a good entry, but the stop loss was a little bit tight right there. mRNA, I like this thing also to the long side because it's above all the moving averages. Opened up so strong right there, pulled back, not a pullback, this was actually a huge drop, this was a huge reversal right there, came back up, and look what's happening right now. It's forming higher lows right here. It's also forming lower highs right there. However, this high isn't lower than this one. I would have said it's a pennant if this high was at least a little bit lower than this one. I see that it's almost the same right there, and then you see this pennant right here, and whatever direction it's breaking to would be the direction I plan on taking it. However, you took it to the long side, put your stop loss right here, and I would have done the same thing. This was a good setup as well. You see it, it's above all the moving averages. It's more strong than its weak because you see the higher low waves, higher, and this one is the same. Basically, it's setting up for a breakout, and I am sure Daniel tried to get this thing here to the long side for the breakout, but yeah, unfortunately this thing dropped as well and it failed. You took this mRNA trade as well low. Entered at the doji at VWAP. This was a good one. If you entered right here, both of those entries were really good, but unfortunately this setup failed. But again, this was a good one. It wasn't a bad one. It just didn't work out. And guys, if you have any comments, if you think I'm wrong, let me know what you are thinking about this trade, because I'm just giving my point of view based on what I am trading. Could be right, could be wrong, and it's good to listen to different point of views. Now, work, and I've actually taken this thing as well to the long side. But why did you get subbed out? Ah, I see that. Based on the 1 minute chart and the 2 minute chart, I actually got subbed out there as well. I've taken it to the long side. My stop loss was really tight, the previous buy the candle, and I'll share my trade with you. This worked in partially really good. And then unfortunately it did a new 2 minute low. This week right here, it was scary. And I'll show you what was even worse. Let me actually show you work. So this is my entry my trade right here. The 5 minute chart right here. And look at this, guys. If we zoom this thing in right here, I saw that it was holding this level really well. So I take it to the long side at 37.17, stop loss 37.09, which is 8 cents. And then I took my first partial at 37.65. But look what's ugly right there. This was sort of a doji with a bigger upper wick right there. Then you are having a reverse hammer right there. And then the next candle, it starts to sell off. So it opens right here at 37.40 and it starts dropping down. This just made me think that this is not so strong. Maybe it will do a reverse ABCD pattern right there and it will get us stopped out at break even. But look at that, it never even got to my break even. So this was a badly managed trade. This partial was good, it wasn't bad because this was already like, I don't know, 4 or 5 hours right there with 8 cents stop loss. But this exit right here, it was a little bit bad. I traded the candles, I didn't trade my plan. I didn't like how those candles looked like. More selling pressure, new low right there, new 2 minute low right there, never getting to my break even, but I exited. With my rules, if I see those candles forming out and the stock dropping down going against me, and if the risk to reward is really small, and you could see by this right here, having 30% left, this was less than 2 hours, so basically it was around, I don't know, 0.6 hours, and I just locked it in. I usually let these 0.6 hour go to my break even, because up 0.6 hour or ending up at 0 at break even, there is no difference. Better hold, because sometimes stocks could never reach your break even and work out like a charm. So you see, with 30%, if I held it for more than $1 move, that would have been a good reward. But locking in half hour was actually a bad thing. Should have held it to break even, but yeah. I see you did the same thing right there. Took to the long side, that same candle scared you right there. Never hit your original stop loss, but you just bailed on it. Took the same entry. Ryan also took this one. That was a good trade. Yeah, that was actually a good trade. You took it to the short side. I wouldn't have taken it to the short side. Now look at this. Yes, this candle shook me out and it made me exit my position. But 100% I wouldn't have taken it to the short side right here. Why is that? Look at the distance between the stock and the 9 moving average in the 5 minute chart. My rule is telling me never go long against the non-moving average in the 5-minute chart. So I'm not taking it to the long side here. I'm not taking it to the long side here, and I'm not taking it to the long side right here when it's close to the non-moving average in the 5-minute chart. Second rule I have, never go with the trend when the stock is extended from the non-moving average in the 5-minute chart. So I'm not shorting it right here because it is so far from the non-moving average on the 5-minute chart. However, right here, you could take it to the short side on a new 5-minute low and put your stop loss above the wave right there. But I wouldn't do that as well, and I think, as you know, that this was a parabolic pullback. This was a strong pullback, and after parabolic pullbacks, what do I wait for? I wait for an M shape and then take it to the short side. Here there was an M shape, but an M shape was on the 1-minute chart, one I took a little bit earlier. This is definitely a better one. If I continued watching this one, I would have taken it to the short side right there. But look at this, dropping down, pulling back, dropping down, pulling back, small M shape on the 1-minute chart, took it to the short side, stop loss right above the new 1-minute candle, and that got me stopped out. I saw that this was actually a shakeout candle, started working out, I took it to the short side, stop loss right above the new 1-minute candle, and I wanted to add right on the break of this candle and move my stop loss to a new 1-minute high. But unfortunately, I got a bad fill right there. It dumped fast, and I just bailed at break even. Not at break even, at really small profit right there, because I just ruined my risk to reward on this one. Hey man, what did you think of that 1-minute candle prior to your entry? Did you not care because it was holding that level? Dan, normally I do care about these type of candles because this is not a good looking 1-minute candle, but I like that this candle didn't even make it to the breakout area. If this candle looked like a reverse hammer and closed or held it all the way to the breakout area right here, so I would assume that this is the level down here, the low of the day holding, and maybe it will need just a little bit more force to push it through it. But here it didn't even make it to the low of the day. It held this area and couldn't even make it to the low of the day. The next candle, it was red. It tried to push and couldn't even make a new 1-minute low. Made a new 1-minute high. Where was my entry? Wasn't the A plus setup I really like, but it was still a good setup right there. We had a support area on the 5-minute chart. We had a new 1-minute high. It was really extended and really parabolic. A lot of factors were there. Not all of them. So it's not a perfect setup, but it was a decent one. I'm going to use the MA crossover in the 1-minute chart as signal short. No, Bitang, I don't use the MA crossovers as signals to short, but I do pay attention to them. I entered the short earlier and got a bad feel at the break. After I build out, work dropped to my goal. That happens. And as we said, that could happen either because the stop loss was really tight, either your entry was so far, or maybe the stock was choppy. We'll need to take a look at that, or a closer look at that. Now let's see what Lenny did. Hey Lenny, how are you doing? Good, that's good. Good to hear that. So SPCE, same thing, below the moving averages, more weak than strong. I see on the 1-minute chart, by this moment, it was above the moving averages. By this moment, it broke all the moving averages and broke the pre-market level right there. So after this candle right here, I'm definitely long bias on SPCE. I want to see what it's going to do on the next candles. It's pulling back, closing as a hammer, but not a white hammer. It closed right here in the middle right there. So this here, I would still be long bias, but I want to see what the next candle is going to do. If it's just immediately breaking above this candle, I'm not taking it to the long side. I'm not chasing it because 40 cents or 30 cents stop loss on SPCE is just a little bit too much. I can't just put my stop loss below the body if it breaks up there. If it starts holding somewhere right here and making small lower higher highs and higher lows right at the breakout, or right here when I see that it's actually trending and making higher highs and higher lows, I could take it to the long side with a stop loss at a new 1-minute low, 10 cent stop loss, which is good for SPCE. Now that never happened. It actually broke down and got to its place where it was holding below the moving averages. So that's making me short biased. It's trying one more time to go up. Reverse hammer, couldn't even make it above view up or close above view up. New 1-minute low, a little bit late entry right here. I'm not sure if you tried to get it earlier. If you tried to get it earlier but you got a bad feel, not your fault, that happens. If not, I try to catch entries immediately or exactly at the lows, there is no reason to wait for extra 5 or 10 cents. Why is that? You are entering 10 cents more, so your stop loss is 10 cents more and your target is 20 cents more. And basically those 20 cents with an earlier entry could have been around 2 hours, right? Okay, that's good. Now you see that it's actually working out in your favor and you add it here. So I assume when you took it to the short side here, your stop loss was either above the body, either above the wick. Once you saw that it was making lower highs and lower lows on the 1 minute chart, you took it right before this candle closed, added to your position and moved your stop loss to a new 1 minute high right there. Was that what happened? Okay, that's good. So you're taking to short side, that's your stop loss. Didn't it get to 2 to 1 right here? Or you wanted to get a bigger move? What was your plan after that? You wanted a bigger move. It came back and then you took it to the short side or added to your position and that caused you to get stopped out, right? Okay, now you see the issue right here. You added below a technical level, below a moving average, which was the 9 moving average in the 5 minute chart or the 20 moving average in the 1 minute chart. But you added when the stock was going up, when it was making higher highs and higher lows. There is still no confirmation to add, right? You never know when the stock is going to end pulling back. You never know whether the pullback will be at the 9 moving average in the 5 minute chart, a little bit below it, a little bit above it, or maybe even the 20 moving average in the 5 minute chart, right? For that, we need to wait for confirmation. As long as the candle didn't close, you can't tell where it's going to go or where it's going to close. You're taking it on this candle to the short side and then it's making a new high. You're taking it to the short side right here, it's making a new high. Taking it to the short side right here and it's making a new high. You don't know what's the end of the pullback, and maybe this is not pullback. Maybe this is just a reversal and it will squeeze above you up, right? For that, you need to wait for a little bit of confirmation, and the confirmation was a new low where you re-entered, right? So if you were a little bit patient right here without adding right there, you could have simply added right here to your previous position, moved your stop loss to a new 1 minute high, so you could basically double your position without risking more than 1 hour, and then you could have got this whole move right there. But I see it was a good entry right there, good stop loss either above the body, above the wick, and I assume you got 2 or 3 hours on this move, right? So yeah, this was good, and you exited the rest at break even, and then you take to the short side. Now this I wouldn't have taken to the short side. Why is that? This was a descending triangle right there. 1 touch, not literally a touch, try to touch it, 2, 3. So you have a descending triangle right there, and a descending triangle is what, guys? It's a breakout setup, right? The breakout happened, but this was not a strong breakout. This is showing you that the stock is not weak. This is actually a fake breakout, not a good breakout for a descending triangle. And once it drops down, it's doing a red candle after that and engulfing on the 1 minute chart, closing as a hammer. This is showing you that the trend might actually change, and it's going up, doing sort of a reverse ABCD pattern, but this is not an ABCD pattern anymore. It is getting back into the range of the consolidation after it broke it. When the stock is breaking out the range of the consolidation, you don't want to see it getting back into the range. You want to see it either go down or go down, then pull back into the previous support, a little bit above it, it's totally fine, and then continue the downtrend where you would be able to add. But here, this was a fake breakdown. It came back into the range, and this is just showing me that the stock is not so weak and it might do a higher wave right there and change the trend. So basically, I would wait to see what it's going to do, either an M shape or just let it go to the long side. Hey man, it would be helpful to me when you review the trades if you could point out or determine what strategy the trade based on. So Tony, I could do that, and if the strategy is based on a setup, sometimes, and a lot of us here, they are trading price action, not the setup alone. You get the feel based on the action, you get the feel based on the momentum play, and sometimes it's just not a setup play. Right here, I could tell you it was a reverse ABCD pattern on the 1 minute chart. Right here, it was a descending triangle setup. Here, Lenny tried to get it for a reverse ABCD pattern, but this wasn't a reverse ABCD pattern. It was a fake breakdown after the descending triangle worked out. Didn't work out really well, got back into the range, and now you're just waiting for a trend changing to the long side right there. Hey Jordan. You're not so late. Now UAL, what is this setup? It's a 5-minute open range breakout, and this is my favorite 5-minute open range breakout. Why is that? This is a 5-minute open range breakout on the 5-minute chart, along with an ABCD pattern on the 1-minute chart. So you're having two setups: ABCD pattern on the 1-minute chart right there. It held clearly the moving average right here, buying wicks right there, and it broke up on the 5-minute chart. It was close to view up. You're taking it to the long side, really tight stop loss. You could either have your stop loss at the low of the consolidation, at the low of the 1-minute candle, depending on how far you want to let it go. Personally, maximum what I would have given to it is view up, just to give it some room in case it makes fake wicks or shakeout candles. I don't think that it would go below view up, and if it goes below view up, it's not a really good trade, and you could just simply re-enter just to have a good risk to reward. That was a really good hold right there. You held it above the daily level right there, and then you just started taking partials because it was clearly making huge move right there, right? Second trade. This is an ABCD pattern we try to catch, right, Lenny? But remember what? It's far from the 9 on the 5. We usually try to avoid taking ABCD patterns when it's so far from the 9 moving average on the 5-minute chart. We either wait for it to consolidate all the way till it gets to the 9 moving average on the 5-minute chart, bounces, and then we take it to the long side, or we wait for it to pull back, get closer to the 9 on the 5-minute chart. Of course, it's better if it gets so close to the 9 on the 5, touches, and then bounces out of it. But at least we want you to get closer to the 9 moving average in the 5-minute chart, bounce out of there, and then we take it to the long side. Right here on your first entry, it was just simply so extended from the 9 moving average in the 5-minute chart. Your stop loss was good. You took it right tight below the 1-minute chart, but I would just avoid it because this rarely works. It works out. This setup, I see it's working out every now and then. But based on the review and the statistics I did on all the ABCD patterns, I took them, and I was trading only ABCD patterns for a couple of months. When it's extended from the 9 on the 5 and it consolidates above the 9 moving average on the 1-minute chart, it fails more than it's working. So it's just not worth taking it there. You tried it one more time right there because it started working right here, and you had fear of missing out, and you got stopped out one more time. And look at this. Even though it worked out eventually, it wasn't a good move, right? Sometimes, and I'll let you know why I don't like this setup. Sometimes it never breaks out. Sometimes it breaks out really well, and the worst thing is that it's breaking out sometimes, but it doesn't make a huge move, and then it just gets me stopped out. Not even a 1-hour move. So looking at this, it did actually break out the consolidation area. But look at this move right here, and look at the move after the breakout, right? That's why I don't love taking them when they are extended from the 9 moving average in the 5-minute chart. Even if they work out, most of the time they don't work out really well, and then they end up just dropping down. Yeah, I see the third trade. That was actually a revenge trade right there. Now let's see what it did on ZS. This was a 5-minute open range breakout, right? Normally I wouldn't take this trade to the long side for a 5-minute open range breakout because this was already a huge move right there. No pullback, but I like one thing right here. It made a new 1-minute low. So look at this. From here, it did no new 1-minute low, clearly uptrending. Then you are having the first new 1-minute low. And normally after a huge move, after the first new 1-minute low, stock will do a pullback. And that's what I love about the parabolic reversals. I love catching those pullbacks. Here, it did a new 1-minute low, but it immediately got bought back up, closing as a hammer. This is showing you some sort of buying pressure right there. 5-minute open range breakout, you are taking it to the long side, stop loss below the previous 1-minute candle or this 1-minute candle, and you partialed on the way up. Not an A+ opinion range breakout, decent one, I would say B, because of this move right here. It already did a huge move with no pullback, but it was decent. Yeah, where would I put the stop loss? I'd put the stop loss at the previous 1-minute candle body or at the previous 1-minute candle wick. I would not use the 1 minute candle hammer wick as my stop loss. Just to give it some room, right? This is not a technical level. This is just to give it some room and let it go with the momentum. What about see this trade as a momentum trade? Momentum trades, it's not just stocks making higher highs and higher lows. Stock consolidating in a range, okay? You're getting in at the breakout area. You go in as long as it has a momentum. Volume starting to increase on the way up, right? You get in on the way up. You don't have a technical stop loss. You're chasing it a little bit right here or right here, as long as the time and sales is still flashing green, and as long as it's making the move with a steady speed up. Without having a technical stop loss, you'll just give it 5 or 10 cents below it just to survive the consolidation within the 1 minute candle, and you will be partialing every time it's starting to get heavier. So it's going up, starting to get heavier, you take a partial. Continuing going up, starting to get heavier, you're partialing. Going up heavier, you're partialing. That's the momentum play. But when it's just going up slowly, pulling back, it's not a momentum play. This you just get in with the trend, right? Perfect. ADAP, you try to get this thing for a long, right? Long, partial, and exit the rest at break even. Now this wasn't so extended, right, from the moving average on the 5 minute chart. It was a short. Okay, for a short, one rule right here. This is a fourth continuous 5 minute candle with no pullback still. This is 2 dojis, which will be an exception for me. Remember what I said? It's either 3 continuous 5 minute candles to the downside or to the long side, and I avoid taking those trades. If I have one candle, then I'm having 2 dojis, still making higher highs and higher lows, and this is the 4th candle. I could take it on the 4th candle because it had a consolidation period right there. Either I want to see a pullback before the 3rd continuous candle to take it to the short side, or I want to see it consolidating, taking some resting period with slightly increasing volume, and then I want to see a breakout with an increasing volume to take this trade as sort of reverse ABCD pattern. So stock drop down, pull back, drop down again, and you took it to the short side one more time on the way up. You see, this is the problem here. Right here it looks like a double bottom, okay? Double bottom, and it's making a new 1 minute high. It could do anything right here. It could just simply drop down, you're right, but it's not looking great yet for to go down only at a new 1 minute low. Or it could just simply do higher highs and higher lows candles and just reverse. We never know how the market is going to go, right? And that's why we're waiting for as much probabilities as we want, as we can, to be in our favor. Now this is the higher high candle, so now it's a double bottom setup, and I would not take it to the short side on the way up. Here you did the same thing, right? You re-enter to the short side on the way up, still no new 1 minute candle, and it could have just simply did a new 1 minute high candle all the way to the previous pivot point, right? It didn't do that, and it did a new 1 minute low right there. So this candle right here, it was decent to take it to the short side. The breakout candle for a small descending triangle was a perfect candle to add and move your stop loss lower. Try to avoid going short on the way up or long on the way down. Wait for the confirmation candles, because sometimes this works out and sometimes this could just actually ruin our day, right? Drop down, closed as a hammer with an increasing volume at the low of the day. Did sort of reverse ABCD pattern, and you see the issue here? Same thing. Stock is extended from the 9 moving average on the 5 minute chart, right? You try to get in for a reverse ABCD pattern on the 1 minute chart, because on the 1 minute chart it looked so weak for you, right? It's pulling back, it's making a doji, new 1 minute low, not bad for a short on the 1 minute chart, but look at the 5 minute chart. It is extended from the 9 on the 5. So in this case, we just simply avoid this trade. Either we catch it to the long side after the hammer, after the bounce of the support, because it is extended from the 9 and the 5. We take it to the long side on a new 1 minute high candle and hold it, hoping that it will go to the 9 and the 5 as a target for a parabolic reversal, or we just do nothing and wait for it to go to the 9 moving average on the 5 minute chart, see how it reacts, and then take it on a new 5 minute low to the short side if it gives you confirmation candles and gives you some good stop loss. Setup. Do you see why this trade? Now, this wasn't like the worst when you shorted it. You just at least shorted it with the pattern, which is a descending triangle, and with the trend, right? But definitely better if you just wait for a new low. This trade was a little bit risky. Better wait for it to get closer to the 9 moving average. DLTR, another thing I wouldn't have done. Remember what we said? I don't love taking stocks to the short side against the moving averages, as long as it's holding above the majority of the moving averages on the 1 minute chart, the 15 minute chart, the 30 minute chart. I would be long biased. When it's stuck between moving average, here you could see it's below the moving average on the 1 minute chart, but it's above the moving average on the 5 minute chart. I also try to avoid them because I'm not sure what's going to happen. If I take this thing to the long side right here, it could simply come back to those moving averages, which it every time closes below, and then get me stopped out. If I take it to the short side, it could go to the 20 moving average on the 5 minute chart of the daily level I have below here and get me stopped out. So in this case scenario, I just simply avoid trading. We have a lot of stocks, right? We have huge watch lists. Gappers lists these days are really huge. There are tons of stocks to watch. Instead of catching something which is choppy in a range, making hammer, then making a reverse hammer, then making a doji, then dropping down, then making a hammer, just watch something else which is trending and which is trading more clearly until the stock you want to watch gets some sort of clear pattern. And you could see it here going up. You try to take it to the long side right here, right? And not bad. At least here it got back into the trend, and at least here you took it with the direction of the moving averages. It's above all the moving averages on the 1 minute chart, above all the moving averages on the 5 minute chart. It's strong on the daily. You could take it to the long side, but again, really tight stop loss. At least this should have been the stop loss, the level it bounced off, right? If you take it to the long side and put this as your stop loss, you would never be stopped out. You saw that it was not failing, and you re-entered one more time, and this actually worked out. Exited the rest at break even. Then you took it to the long side one more time. Now here I wouldn't have taken it to the long side. Why is that? 2 reverse hammers against me, and then a hammer in my direction, right? Looking at the bigger picture, yes, it is more long. It finally broke the high of the day. It is with the direction of the moving averages. It is strong on the daily. So you have a lot of indicators telling you that this is long, but you need a little bit more confirmation. You don't take it to the long side when it's making lower lows and lower highs. And I see you took it to the long side right after the hammer closed, right? You didn't wait for it even to make new 1 minute high right there. So you see there, one hammer right here, another hammer right here, bouncing with a few moving average. You see it closing 2 times above the bouncing 2 times above the 9 moving average on the 5 minute chart, closing as double hammer on the 5 minute chart. Then it's getting tighter in range right here and breaking the high with increasing volume right there. So yeah, this would have been a good entry right here. It would have been also a new 5 minute high right there. Put your stop loss below this, right? We don't use we don't use the wicks as our stop losses. We use the majority of candle closes as our stop loss. Entry right here, and then go for the run right there. So yeah, this wasn't necessary entry because it was still doing nothing at this moment. Wasn't bad right here. Definitely better to wait a little bit more, but at least this is not the worst thing. But the stop loss was really tight. Not the worst right here. This was a little bit early of an entry right here. If you waited a little bit more, even this entry could have been a winner right there. But you managed to get around the break even, I guess, right? One loser right here, small loser right here, small loser right here, and a decent run right here. So all those trades got you back to break even, I assume, right? Or you managed to get out green. Yeah, break even. You see, if you are patient, you could have easily turned this one into a good green trades. Right, one trade, you'll get 2 Rs, be a little bit patient, and get another 2 Rs. The key here is patience, and I think patience is the most important skill after discipline, and definitely after trade management. we need to wait for good setups. It's tough to watch the price action live. You don't know what's going to happen after. You don't know that this is going to close as a hammer. Sometimes you are afraid that this will just simply shoot up and go without you and you'll miss the move. So you need to enter a little bit earlier, right? But it's fine to miss some moves every now and then if the setup is not really clear. I agree with you, Lenny. It's really tough to do that live when the candles is still not closed. You're not sure what's going to happen. You're afraid that there will be a sudden spike up with a huge candle which will move just without you. But you're doing better and you will overcome that. I believe you. Rosny. Hey JC, I'm doing those twice a week, Tuesdays and Thursdays, 12 p.m. Eastern, and you can find them all on YouTube. They are recorded, and we stream them on YouTube. Mark, let's see what you did there, and then we have TC. So Mark, set up 2-minute opening range breakdown after a VWAP rejection, and you could see that here, guys. It was 2-minute open range breakdown after it wicked back a little bit and rejected VWAP. Right here, drop down, pulled back, and that was the entry to the short side. Signal sell off in the pre-market. In the pre-market, it was dropping down right here, right before the market opened. It did sell off. Pull back to the level to view up, weak level 2 and tape. Stop loss was just above view up. Trade management entry was a little bit early. I don't think this was an early entry. I think this was good if you got in after the wick. If you got into the short side right after this candle closed, then it was early. If you waited for it to pull back and then it started going down and after that you got the entry, I don't think it was really early. I think that was actually the ideal entry. Small partial and too much PNL partialing. Decent exit for 3R. It could have been a 4R. So let's see what happened there. 2-minute opening range breakdown right there. Took it to the short side. And what was your stop loss? Was your stop loss the half the week or view up? Manhattan, I wasn't recording them before April. So yeah, it's April and after that. But they're all in YouTube after April. Just above view up. So yeah, you had, and your first partial, was it a 2 hours or was earlier? One and a half. So okay, that might have been a little bit earlier, right? You got into a good setup with a good entry, with a good stop loss, and it was going down, right? Basically, it not even at the low. If you waited for this small partial right here, this small move right there, you'd have got your first partial at 2 hours, right? And I could not find the ones from May. Yeah, basically, sorry. I'll send the link Manhattan once we are done with the trade review, like 2 minutes before 1 p.m. Okay, in the announcements. Okay. So again, this was going down. It was perfect right there. You could have just simply held, right? There was nothing telling you that this thing is going against you. It's just making lower lows and lower highs. Now, if you are having a huge position and those are small partials, 10% partials or 20% partials, and you see that it's actually making a huge move, you don't want to let all the profit go back. You could take some small partials. That's totally fine. But leave 20 or 30% after locking in at least 2 hours to run until it makes a new 2-minute high. That new 2-minute high will be the place where you exit most of your position, 70 or 80% of your position, and the 10% you leave it to either touch your break even, because 10% or 5% it's almost nothing, right? After you're locking in, let's say 5 hours and you're having 0.5 or 0.6 or 0.2 not lock in, it's literally nothing, right? You will hold that small partial all the way to your break even. In case it doesn't touch your break even and it starts forming a reverse ABCD pattern with an M shape, you could add to your position, which will eventually get you stopped out, I see right there. But this will just teach us holding more into our winning trades. When the price action, I bet that after you're taking your last partial, you don't pay much attention to what's happening in the price action, right? You just let it do whatever it does, and if it does some setup, you could just take your position. If you're having a little bit of your position in left, you will pay closer attention because that's your money inside this position. You want to make it a winner, or you want to make it a bigger winner, right? And because of that, you will be paying attention to each candle, to what each candle is doing right there, and you will get better reading the price action. So leaving the 5% or 10%, it's not because you want to make more money from 5 or 10% left of your position. It's just to read the price action better. And when you see how the price action behaves with those 5% or 10%, on the next trade, you will be holding more because you will know that it's normal for the stock to pull back. You will know how much it is normal to see the stock pulling back, when it is better to hold and when it is better to just bail on the trade. KC, let's see what you did there. CCL, you took the, okay, now this is not bad. This was a momentum play. Now these guys is a momentum play. Stock is dropping down so much, pulling back, lower high. You see that this way up is with this normal speed, and then you could see that the uptick, it's ticking up 1 cent, dropping 2 cents, ticking up 3 cents, dropping down 4 cents. And then you take it to the short side, it's dropping down if this was a short, right? And I normally, on a momentum play, I just put my stop loss at the high of the week. I want to see when is the end of the pullback. Once I feel that it's starting to struggle at some certain area, I take to the short side and put my stop loss at that area right there. Now, this is tough to explain because we need to watch the live price action there and see what's doing there. Sometimes it does that, and sometimes it just wicks and drops down as if nothing happened, and I just miss the move right there. I think I will do a webinar on momentum play with recordings, which will make it easier to see this. Now, worked out really well. Not sure why you didn't take any partial right here, because this looked like a good small bear flag right there. It broke down, but after the breakdown, buying pressure, buying pressure, buying pressure, buying pressure. This is showing that this was a fake breakdown and a new 1 minute high. I personally would have just bailed on the trade totally right here. It's dropping, coming back up, and I think when you shorted it here, you didn't take any profits because your stop loss was at the high of the 1 minute chart. I'm not sure if KC is here with us, but looking at this was a huge move. I bet this wasn't his stop loss. Maybe this was his stop loss, and because of that, he didn't hit the 2 to 1. When it dropped down, he added to his position, and I'm not sure why he added it right here because this was a little bit risky. It just broke this pivot right here, pivot point. And this was the high, right? You took it on the way up, right? This is the 5 minute chart. Maybe on the 1 minute chart there was something. Is there the 1 minute chart here? Yeah, there is a 1 minute chart, and we see that it wicked down right here. Even with this candle right here, I wouldn't have shorted it or added to my position right here. It's just a little bit risky because it's making higher highs and higher lows. Right after this candle here, and then a new 1 minute low. Like this is a shooting star, or at the high of the pullback, or reverse hammer at the high of the pullback. These would have been decent to add, but definitely not this, at least not for me. But one thing I like about KC is how much he held into his winning trade, right? And look at these guys. He had a good entry right there. It made a good move right there, and then it started consolidating. It made new highs. It went through the moving average crosses, but KC held it really well all the way to the moving average, another moving average right there, another daily level right there. So he partialed basically at daily levels, and that was really smart. I love how much he held right there. Could this be a reverse ABCD after 5 candles? Let's see the 5 minute chart. This could be a reverse ABCD pattern right here, but I would not take to the short side on the first 5 minute candle low. because this was a parabolic pullback right there. Yes, this was a 70 or 80% pullback, which sometimes I really like to see. But looking at those candles right here, I would be a little bit hesitant taking it on the first new 5-minute low, because it could simply do a higher low and then continue uptrending. Now, after this candle right here, and this is a 3-bar play, right, guys? You have a huge candle, a doji, and then a new high, or huge drop, a doji, and then a new low. This is a 3-bar play. And I see a reverse ABCD pattern with a confirmation, a 3-bar play. This entry right here would have been decent to the short side with the stop loss right there, and then just take all partials down there. You thought that this candle 1027, and I think this one was interesting, and yes, it was interesting. I'd also like this one. It's definitely more weak than long looking at the intraday price action, but on the daily it gapped up, right? So it's strong on the daily. On the 1-minute chart, it's coming back and it's squeezing above all the moving averages. And this candle is interesting, but we can't trade only based on a candle, right? We need more confirmations, and the more confirmations you have in a trade, the better it is. So at least after a confirmation candle, a new low would be a good confirmation. But I see that your trade analysis actually worked out well, and the trade eventually worked out as you planned. We have Jordan, and then we have Dan. So let's see Jordan. Jordan traded again and took it to the short side. General question for you. Do you know if Andrew still does recorded trade reviews? Tony, do you mean his recaps he was doing before? He's not doing them anymore, but he does a quick recap on his trades after he's finishing his live trades. So if you are in the chat room, he's taking the trades live, he is explaining them, and he usually mentions the good and the bad things he did there, but he doesn't upload them on YouTube. Now again, look at this. This stock was dropping down, pulling back. This was a nice reverse ABCD pattern right here, right? This entry right here wasn't bad for a short. Then you see a pivot point from the previous level right here. It was closing above this level, and it started consolidating at this area. So this was a descending triangle setup right there. The best entry was on a descending triangle is to get in as close as possible to the resistance, which in this case is the 9 moving average in the 5-minute chart. You try to catch any entry right there with the stop loss the previous high wave, or you get in right for the breakout. And I get in right for the breakout if the support is so clear. If you see that it's holding some level to the penny, like 23.50, and then it's getting tighter and tighter and tighter in range, literally into 23.50, I would get in for the breakout with the stop loss a new 1-minute high. The third possible entry for descending triangles is the breakout area. Once it's breaking down with increasing volume, unfortunately we don't have the volume bars right here, I would take it at a new 5-minute low or a new 1-minute low for the breakout. Once it makes the move, which is here, I wouldn't take it right here. Why is that? This is already a chase right there. This was the support area. This is the breakout area. We either get good entry before the breakout, we either get in for the breakout, or we get in after the breakout happens, still as close as possible to the resistance, to have a stop loss. To have tight stop loss and a good risk to reward. Right after it goes down, this is already chase. It either does a pullback to the previous resistance and then drops down, or it could just simply fail after a huge move right there, right? And this is the first thing. The second thing, this is 1, 2, 3. This is 3 continuous candle, which is breaking my second rule. Don't go into the short side on third continuous candle, or don't go long on the third continuous candle unless it's doing some consolidation area right there. 1, 2, another consolidation, 3. Now after consolidation area, it's possible to take it to the long side with the stop loss below the consolidation area. Then this candle closed as a hammer right there. So even if this candle, stock pulled back all the way to the previous support area, acted as resistance and did a new low, I wouldn't take it to the short side. And I talked about this in my previous trade reviews. I don't love taking reverse ABCD patterns against hammers or against shooting stars if it is an ABCD pattern to the long side, because this is the reversal candle, and most of the time when I have a hammer at the low of the day with an increasing volume, stock makes some lows. It didn't do that in this case, but we're assuming that it did a new low. Sometimes it does a new low and it makes a higher low and then just gets stopped out. So I never go reverse ABCD pattern against a hammer or against a shooting star. Once it took, yeah, this is the round number and it broke the round number, but remember, this is only one indicator, right? We need more indicators. We need the setup, we need the level 2 if you are trading with the level 2, and I rarely do that. We need the time and sales to be there. We need to see the moving averages, crosses, or we need to see confirmation candles. The more indicators you have in your favor, the better it is. Only one thing is not enough. And remember, you should always have an entry, stop loss, and the target. And I see that your stop loss was the previous support area. This was a little bit too much, right? The stock already broke down and it already did $1 move, right? So you're taking it to the short side after $1 move with a stop loss of $1, and you wanted to make at least a $2 move. So we want it right here to make a $3 continuous move with no pullback, right? And if you look at the price action before, you could see that in average, it is making a move of around $1.75 or $2, right? You see these moves right here at the consolidation areas. It's basically $2 moves or $1.50 move, except for the biggest candle, which was at the open, and even that candle was only $3. So when you manage your entry, your reward, and your stop loss, don't put it randomly based on daily levels or based on anything you have. Try to look at the previous price action and look if the move you are looking for is reachable and if it's possible to actually get that move. And that's one of the advantages of trading afternoons, trading later on the day. When you're trading the first 5 minutes, you're not sure of what the stock is capable of. You're not sure how much it can move with no pullbacks. You're not sure how much should give it room or how much you should hold on into the trade. When you're trading afternoons, you have a lot of data before, right? You could analyze this data. You could just get an idea of how much the stocks moves without pullbacks, what is a decent stop loss for this kind of stock, or what's a good target for these kind of stocks. This is one of the best advantages of trading the afternoons or trading later on the day. Dan, let's see what you did. You actually code this thing. I was watching this thing, but I came out a little bit late. It was called, I think, in the multi-strategy scanner, right? Look at these guys. What is this? This is a climactic volume, right? Exhaustion volume. That's totally right. You can call it exhaustion volume. You could call it climactic volume, right? It is happening at the high of the day. At the high of the day, you're having a doji. That doji is happening on the 1 minute chart when the stock is so extended from the 9 moving average on the 5 minute chart. You are having a new 1 minute low candle. Could put your stop loss above the previous body right there, and then just go all the way to the 9 moving average on the 5 minute chart. One thing which is not enough in this trade is a daily level above the current price action, but you can't have it all, right? You will have a lot of indicators in your favor. You need to have as much indicators as you can in your favor, but you can't have them all, right? And look at the best thing here. This is a clear uptrend, no new low for around 20 minutes or 15 minutes. And this is the first new 1 minute low candle. If I am long right there and I'm following my rules, which is telling me wait till the candle makes a new low and then exit 70% of my position, that will be the place where I'm actually exiting. And that's the place where Dan actually took it to the short side. Everything is there. Extended from the 9 on the 5, exhaustion volume, new 1 minute low. And this is clear. It's not as if it was making fake new 1 minute lows before. And this is one of the best setups I love for parabolic reversal. When the stock is making fake new 1 minute lows, it's tough to catch a reversal because it could make a new low and then continue going higher, right? In this case, you definitely need to see a daily level above you, or you need to see climactic volume, because it already did fake new lows, and the probability of you catching the final low is a little bit tough. But here it's clear. It's clearly making higher highs and higher lows. It's clearly that this is the first new low after an exhaustion volume when it was so extended from the 9 and the 5. So yeah, this was perfect, and this was a really good trade, Dan. Good job on this one. Pilot fish asset formed. It's tough to go in after it closes because it could just close way down there and you will ruin the risk to reward right there. Pilot fish, let's see what you traded. You traded AMD, you took it to the short side and you got stopped out. Now this is not a bad short, but I would personally get a little bit earlier. Clear uptrend right there. Sort of a head and shoulders setup right here. It broke the shoulder right here. You see, this is the neckline place. It broke it down, and right here I would assume that the stock will just simply sell off. Unfortunately, it didn't do that, and it kept chopping out and making lower highs, right? At the same time, it kept doing higher lows. So it's sort of an ascending triangle, sort of a pennant right there. And yes, I would be more short biased than this thing, but I definitely wouldn't take it to the short side right here. This was just a little bit late, right? It already did around 10 or 15 cents move right there. We try to catch an entry as close as possible to the resistance area, but even though it's totally fine, you see that this stock can actually make a decent move there. So having a 10-cent stop loss, you could get a 20-cent easily, right? You don't want it to go all the way to the low of the day. You just want to get a 2R move. So yeah, this wasn't the perfect setup, but this wasn't bad as well. Good technical level as your stop loss, the level it actually held for around 20 minutes or 30 minutes. Unfortunately, it got back to your technical stop loss. One thing though, in this case, I would have exited earlier. I wouldn't have held to my original stop loss. If I shorted it at the place where you shorted it, I would use the same stop loss. But there will be a reason for me to bail a little bit earlier. It broke out right here, right? It broke that level right there, and then it immediately squeezed closed as a hammer and started making higher highs and higher lows. So yeah, I think I would have exited a little bit earlier right there, but maybe at the moment I would have also held to my original stop loss. But yeah, this wasn't a bad trade. Peter, what did Peter say? I don't find the trade unreasonable. It was a little late, but I could easily have been caught on that one too. Yeah, exactly, Peter. This wasn't the worst stuff. I mean, looking at this, it's a decent stop loss. 10-cent stop loss. AMD, you see that it actually moved 70 cents, and you don't want to make 70 cents move, right? 10-cent stop loss, you want to make 20 cents more for your 2R. So you are just asking for less than half of the move which it made. So yeah, this is a reasonable trade. A little bit late, but it's fine. Yeah, I like the colors as well. They are interesting there. Unfortunately, I can't use the white background and the red candles. I think my eyes will hurt me. But this is good. So J-Bone, let's check those ones and we'll be done for today. Guys, if you have any questions, feel free to ask, and I will send the playlist. I still didn't forget that. So DLTR, you try to catch this thing to the short side. Parabolic reversal, indicator confirmation, $5 move up with no pullbacks, right? From the market opened from 95 to 100 with no pullbacks. Extended from the 9 moving average on the 5-minute chart, and you can see it here, guys. It is extended from the 9 moving average on the 5-minute chart. Hammer on the 2-minute chart at the high of the day. The 2-minute chart, this is sort of a hammer, sort of a doji. On the 2-minute chart, I personally love reverse hammers, but this is what we call a hanging man, which is good. Another good confirmation is the doji on the 5-minute chart. If you have a confirmation candle on the 5-minute chart, it is much better than a confirmation on the 2-minute chart or on the 1-minute chart, right? And then you're having a new 5-minute low. Entry 99.36, and your stop loss was at the break of the hammer, buy on the 2-minute chart, got in before the pop out of the 1-minute candle, stop at the high of the day. So you use the high of the day as your stop loss. I personally wouldn't have used the high of the day after this week. If this week first happened, looking at the 5-minute chart, I would just randomly give it just a little bit of room, because on parabolic reversals, when they work out immediately. They rarely form a double top, and if they form a double top, I could just re-enter with the tight stop loss just to have a good risk to reward. But still, this was good. This was technical level. It wasn't that much, and on DLTR, you definitely need to give it a little bit more room. 50 cents, 60 cents move on DLTR, which is making around the dollar move on each candle. This was a decent stop loss. I like that. Intended risk to reward is 2 to 1 for the 9 on the 5-minute chart, plus 3 to view up. What you got is 2.4, which is still a decent risk to reward, right? Thoughts, hold onto the first piece a little longer. No reason to exit that soon. Second partial was better as it hit the 9-moving average on the 5-minute chart. So looking at these guys, the entry was perfect. It did a small bear flag setup right there, and then it just sold off, right? And yes, there was no reason to partial. It just was dropping down. Maybe I would have taken a partial right here, which is the next pivot point, which was the second point you actually took a partial at, and which was the 9-moving average on the 5-minute chart. But even here, it wasn't bad. I love it when the stock is going in my favor, making small 1-minute candles, lower lows and lower highs, or higher lows and higher highs. But when it makes a sudden huge drop, I usually take partials, because it could just simply squeeze back up, and the risk to reward just gets a little bit messed up. When it's making lower lows and lower highs on the 1-minute chart, I could just simply tolerate it making a new high on the 1-minute chart, giving a little bit of profits and partialing on a new high. But when it's dropping so much, I can't wait for a new 2-minute high to take a partial, right? Because this is a huge move right there. It's not worth waiting for a new high to take a partial. So yeah, this wasn't a bad partial. After huge drops, it's decent to actually take some partials. Hey Amal, glad to see you here. How have you been doing? Hey man, what is your approximate 1 hour partial? 10, 20? Manhattan, it depends. This is a pivot point right here on DLTR, and it is the 9-moving average on the 5-minute chart. If I'm so patient, I'm holding to the 9-moving average on the 5-minute chart, I'll partial 70%. Because this was a huge move. I held it so much, it got into my target, and I'm at my target, I'm taking a huge partial. If I'm taking earlier partials, similar to what Dan did right here, right? This was a huge candle. It's not my target, but I can't really let it make a new 1-minute high. I will take a small partial right there, 20% maybe, 30% maximum, because it's early and I know that it could go more. So yeah, if I believe that there is still room, it will be a small partial. If it's getting to my target, that will be a big partial. Can you just look at Snap? Yeah, of course, Dan, I could take a look at this one. It wasn't mRNA. Snap? I don't see it. Is it mRNA or Snap? This one, right? Oh, Dan. Let me see. Did I miss a trade from your trades? Okay, I'm sorry about that. Thank you for reminding me. Yeah, I'll take a look at both of them. So, Snap, would I have taken the 1-minute hammer on high volume made me worried. Yeah, this candle would have made me worried as well, but I see that it actually did nothing there, right? It was extended from the 9, from even the 9 to 1, it closed as a reverse hammer right there, took it on a new low. It was decent, and you have climactic volume right there. So yeah, I think I might have taken this one as well. It just didn't work out, did a fake breakout, and then it just consolidated sideways. Yeah, this was a decent setup. It wasn't bad. You see the climactic volume. This candle, yes, it's a little bit tough. The 2-minute candle is good. A new low, no new lows. You see, this is so clean. There is no new 2-minute low until here. So yeah, this was a decent setup. It just simply didn't work out, unfortunately. And this candle also looked by them good when you took it, right? It looked like a double reverse hammers or shooting stars. So yeah, this was a good one, but unfortunately it didn't work out. Now, mRNA. Strong move to the upside, pullback, and this was the parabolic pullback. So because of that, I would wait for a W shape. This looks like a W shape. sort of, right? Sometimes we just don't know what the W shape or where the W shape is at exactly. You took it to the long side right there, tightened your stop loss, and it unfortunately got you stopped out. The setup was good. I mean, you could have re-entered at the breakout of the pivot point right there, right? Or re-entered after the doji right there, but just a little bit risky, and it's tough to re-enter after a losing trade. ABCD type C, gap at the pre-market, gapped up at the market open, it sold off but reclaimed view up, close to the 9-moving average on the 5-minute chart, and I see that. You waited for a new 2-minute high for your entry, which was right there. Intended 3 to 1, but you ended up losing 1 hour. Did not place the correct stop. Would have been one and done trend. Yeah, the stop loss here was tough, and I think your stop loss was fine. I'm not sure I would have put my stop loss right there. I would use the low of the consolidation as my stop loss, which is this candle right here, right? Somewhere right here. And yeah, if I had taken this trade, I would have used exactly the same stop loss you used, and if it got me stopped out, I think it would have got me stopped out as well. I would either stop looking at it, or I'll just wait for a more clear setup on this one. So, but yeah, this was a good one. It's just been a little bit tough. So yeah, that's it for today, guys. I'll send the playlist for the trade reviews here on the announcements, and you could take a look at them. Thank you guys on YouTube for sticking with us. Have a good day, everyone. If you have any questions, feel free to email me at ayman@beerballtraders.com, and I will